But we want to talk a little bit more about that and to see how we're going to make the most out of this. And like we said, taking this momentum further. I'm joined by Anzetse Were. Thank you for joining us.
Thank you.
Who was here with us last week. She's a development economist and columnist with Business Daily.
Yes.
First of all, your thoughts on a lot of the pledges and commitments that were made at the summit?
I think what we're really beginning to see here is the actualization of impact investment in Kenya and in East Africa as a development finance tool by North America and the U.S. specifically. There has been a long time when the idea of triple bottom line performance has been something that, you know, impact investment players have been trying to espouse in the Kenyan space. And by that we mean financial, social, and environmental returns. So you either have a double bottom line or a triple bottom line. So I think what we're seeing here is that there's an understanding that there is a need for some type of capital in order to build the capacity and the skills required to then generate the entrepreneurship skill to drive economic growth. So I think the theme of impact investment and sort of the mainstreaming of impact investment, when you see the likes of Goldman Sachs starting to get into impact investment, and just to get a size of the market, it's going to be up to $1 trillion in the U.S. alone. So it's a significant market, and I think we should try to leverage that type of funding a bit more aggressively.
All right, so let's talk about the differences in investment, and you had mentioned this earlier in our conversations prior to this interview about how U.S. investment is different from countries like, say, China or India, who are big investors in this region as well.
Yeah, I think there are very significant differences. In terms of the bouquet of options that the U.S. provides us, they're quite different. One is, first of all, they're going to be using alternative finance tools such as impact investment. Second of all, there's going to be a much larger role for the U.S. private sector than you see in China. Often China, it's a very government-heavy strategy, and even when there are private individuals investing in the country, they tend to be backed by state banks. But in the U.S., you'll find a lot of U.S. foreign private companies investing. I think another important thing that's going to happen is that a lot more noise will be made about the ease of doing business and the ecosystem of the business environment in Kenya. What I found is that with China and India, they sort of just get in and get business done. They don't make too much noise. They figure out the systems and sort of get done within that context. But I think as the U.S. private sector is going to be coming in, governments will be put to task to put in all those things they've been promising: the infrastructure, the regulatory requirements, ending corruption, giving tax breaks, etc. And it will be a much more point of emphasis that the U.S. private sector is going to make, unlike, you know, what China and India have been doing in the past.
All right, for those that were at the summit, obviously they were able to make connections and networks with the big investors that were here. What about for those who were not there? Because there's hundreds, in fact millions of others who were not there, and not just in Kenya but also in the region. And from what we've seen from that report, this is not just geared towards entrepreneurs in Kenya. It's also within the East African region and wider in the African continent. So what happens now? How do they take up these opportunities that are available?
I think it would, quite frankly, be dependent on the strategy of deployment. I mean, I think from what I'm seeing is that there seems to be a partnership between local institutions and foreign institutions developing the finances that are coming in. I think there is a deep emphasis and a need to emphasize impact investment, because that is the only way you're going to get the poor and the absolute poor incorporated into these strategies. Because often what you find when you get into these big deals, a lot of the people who get drawn into the programs are people who are a bit better off, you know, not necessarily the middle class, but maybe would call them the elite poor. They're not the absolute poor. So we need to develop strategies using this patient capital that's coming in. And the good thing with impact investment as well that I should probably note, which is why I'm so excited about this, is that it will be willing to take lower financial returns in return for social impact. So I think what we need to get right is several things. One, leverage that impact investment. Two, make sure we're tracing the social impact so that we can see who's benefiting and who's not benefiting. Three, I think there needs to be specialized pools of funding for the absolute poor, and that will be in terms of education, in terms of healthcare, in terms of getting them off their feet and making them more employable, because there is an assumption right now going on that everybody wants to be an entrepreneur. Not everybody wants to be an entrepreneur. And some people just want a steady job.
That's such an important one. And even talking about entrepreneurship in terms of employment and in the private sector, and we've been talking about that. What does the private sector, first of all, in Kenya need to do more? I mean, we've seen a couple of pledges from Chase Bank and a number of others, but what does the private sector need to do more? Should they not be taking up entrepreneurs in terms of innovating and finding new products, either in the service sector or new goods that can be sold and therefore benefit the private sector? It seems to be a mutually beneficial...
I mean, this is a problem that I've seen and is really quite sad, is that the private sector in Kenya is quite risk averse. They are not willing to put in money in what they think are risky ventures. As a result, you have a pool of entrepreneurs that are credit hungry. So what happens is that those pool of poor entrepreneurs, a lot of whom are youth and women, will take expensive credit, even though it's not good for them, because that's the only type of credit that they can access. So I think what private sector needs to do is, first of all, create and partner with development finance institutions and impact investors to allow them to take on more risky investments. We have reached a stage in Kenya where if we're not willing to take the risk to invest in our people, which is sort of what the North has done, you know, with angel investing, with venture capital, if we're not going to be the ones to invest in our people, we won't figure out the models properly. And it's important that we as Kenyans and as Africans invest in each other, so that by the time we're getting into bigger and bigger sums of money, we've figured out the models, we've given them the support, the training and the mentorship. And I think something that private sector would encourage them to do is really build business incubation centers for youth and women in particular, where they get access to training, where they get access to mentorship, where they get access to networking opportunities, and just office space, and just a creative space that allows them to get to the core of doing their business. Because often what you'll find is that people will have a business idea, but they don't want to leave their steady job in order to venture into that. So if we could have a private sector consortium coming into Kenya, building a business incubation center, that would be good, because also what would happen, it would develop a pipeline of projects that can then be funded. Another point that I think we should note is that it will be interesting to see, with all of these things that you mentioned from the GES, is what sort of structuring is that going to be through? Is it going to be through equity? Is it going to be through debt? What are any of this going to be coming through in the form of grants? What are the percentages of that? Because that will tell us the extent to which that financing is development-oriented versus profit-oriented. And I think that will tell an important story.
All right. We have just about a minute to go. We've talked about the role of the private sector. And let's say, talk to us about this very catchphrase now, the enabling environment that should be created by the government. What does that mean exactly, and what does the government do towards creating this so-called enabling environment?
Well, there are a couple of things. It's formal and informal. In terms of formal, you have to make it easier for people to register businesses. You have to make it easy for them to open up accounts. You have to make it easy for them to get in, get their work permits, get their businesses up and running. You have to get your infrastructure up and running in terms of transport, in terms of energy, make infrastructure affordable, because when you look at the way companies factor their inputs, things like right now, things such as infrastructure and energy are some of the most costly inputs for the manufacturing sector, in particular in Kenya. So government really must play the role in cutting down those costs, getting those down, so that those inputs are not as costly and our prices and our products can be a bit more competitive in the market. But I think the informal side is equally important. This is where we talk about corruption and sort of a culture of cronyism and entrepreneurs and all of these things that we've heard about, where people are not getting the money that they should be getting. They're getting it because they're pulling in favors, or they're getting in favors, or of course corruption comes in and plays a role there. So it is important that the government is seen to not only do the formal regulation stuff as well, but really clamp down on this culture of corruption, because as has been said before, it's a costly input, and it is a tax for companies, and it will have a negative effect. So I think they need that dual-pronged strategy to make sure that the environment is stable for investment.
All right, thank you very much. And Zetsewere, breaking it down for us on just where we need to go after the Global Entrepreneurship Summit. She's a development economist, and we thank her for her insights on KTN Weekend Prime tonight. We're taking another short break, but we will be back with more news. Also, don't forget, Checkpoint is coming up. Some of those who were invited to speak with President Barack Obama, and some, like John Alanamu said, who would have liked to. That's coming up after the break. See you soon.